Hey guys, it's Camel Bros, and I've been using the Camel indicator for quite a while now with my bro. It's one of the best tools I've found for timing entries around market cycle lows, whether it's daily, weekly, or yearly. And in this video, I walk you through how I usually set it up, how I actually use it in my actual trading, a real life example of one of my trades, and advanced lower time frame technique that I actually use to actually add to my position size without increasing much risk. So what this Camel indicator does is that it works in trading view, which is this this window you see here, and many of you, I think, if you're in this video, you are pretty familiar with this window. It highlights the three major cycle lows, the DCL, which we call the daily cycle low, and it's usually marked in green here. You'll see this green little camel over here, a green window, and secondly, what we call the weekly cycle lows, which is a chain of 3 to 5 daily cycle lows. This is chained together into weekly cycle low that's marked in blue here in a cute camel indicator and a blue window that projects out the future weekly cycle low. So you also shows this timing windows, right? That I've previously mentioned. These are colored bands that project where your next cycle low is likely to occur. So green is for daily cycle lows, is expected to bottom right now, which is why I've drawn this trend line over here and looking for it to break out, and it has, very fortunately. And there's this blue weekly cycle low, which is within this window of time, and a yellow band for yearly cycle lows, which I expect to see roughly in Q4 next year as it concurs with the Bitcoin cycle lows as Camel has always alluded to, which is about to say bottom at the end of next year. And that would be where most of your money is made. It's where the market is most fearful that you put you put most of your money in. All right, so cycle tops are also marked as either left translated, right translated, or mid translated. So left translated cycle top, which is what you see here and here. This usually means a bearish setup. So for example, here, if you're in MicroStrategy, you would be very familiar with the huge moonshot to 540 in this day. And that implies that until the next weekly cycle, it is indeed in a bearish setup, which you can see here. The next weekly cycle is here, and from here to here, it is a bearish setup. You can draw a very quick line over here, and you see very quickly that until it breaks the trend line, it is in a bearish setup. But once here, you'll see that it's gone pretty well and has shifted to being in a right translated cycle structure, which is indeed uh, bullish. So I'm expecting to see another one in this green timing window, since we are also right translated here. Once it bottoms, the next one over to the next one would be likely also right translated. And MTR, mid translated, is usually pretty rare. It cannot be exactly in the middle, but it means a neutral structure. So I mainly use the DCLs again is the daily cycle low for short-term trades, a weekly cycle low for swing trades, a longer weekly cycle. So you can see it's between here and here, usually, and for this particular one, it usually lasts for 30 weeks. All right. Uh, and yearly cycle lows, which I mentioned previously, is for long-term accumulation. You want to enter in that at that particular point and hold for a couple of years at least. And for the case of Bitcoin and for gold, gold has an 8-year cycle, and we expect it to bottom at the yearly cycle low sometime next year, late next year, and that's where I'm going to put most of money back in. All right. So I usually turn on the cycle types. My usual setup process I'm going to go through here. I'll turn on the usual cycle types that care about the trade. So if you go here, you'll see that there's a setting here, open. You'll see a couple of settings. Actually, it's quite complicated and overall pretty comprehensive. It would behoove you to take some time to learn about it. So you could turn off the daily cycle lows here, on and off. You'll see that camels disappear. I'll turn it back on. I usually like the weekly and the daily cycles. So weekly cycles, you can also turn it on and off here. You see, let me turn it off and you'll see that it disappears. Yes, here. And then yearly cycle low, I usually leave it off. But since it's over such a long time horizon, it usually wouldn't muddle up your window. So I just leave it on for this case. All right. Can also adjust the line thickness uh, and opacity so that it's clear but not distracting. But I usually just leave it be so just so that my setup looks pretty similar to what Camel has. All right. And I also enable this timing low bands. So let me open it up again. Moving down, you see here future cycle low range. If I disable, you'll see that this disappears. I usually want it to be there so that I can time my entries. And so after that, I identify the relevant cycle window. So if I'm swing trading, I'll look for the next blue band here. And if I'm taking a quick trade, I focus on the green band, which is here, the daily cycle low. And from there, I look for confluence because the indicator just gives me a probability zone. And I'll usually combine that with RSI oversold ratings or price bouncing off major moving averages. So for example, here you'll see that it has bounced off. And for last one, you'll see that I also look at key support or trend lines. You see that here, this blue line over here, this blue one over here. I go back to a little bit further. You see that this is my drawing, and once it breaks that, it gives me pretty good support that the cycle lows are in, and it's good. It's a good time to size your trade. All right. So step four, I set entries inside the band with stops just below the recent lows. So position size is usually sized by risking, say, 1 to 2% of your portfolio per trade. So let's go to a real life example, right? I've done using this. So here you'll see that, let me switch over to the log scale. You'll see that right here, I entered right before a big green candle over here. And even though it later retraced a little bit, you see here it retraced a little bit, it was I was well in profit. So I thought that was a pretty good trade. A second one was here, let's say. You'll see that uh, it's a daily cycle that was not picked correctly. So I jumped in a bit early. I jumped in around here. The window opened. I saw a reversal, you see here. But it was a two drives down pattern, and I was roughly a week early because you see that it drove down in a second time. So lesson learned with volatile assets like MSTR or Bitcoin treasury companies or Bitcoin itself, you should wait for one or more form of confirmation, either from this BS's breasted cross or trend line breaks or simple moving average breaks. So next one is so there's an advanced trick that I like to use where I switch over from the daily to the 4 hourly time frame. And I usually wait for the daily cycle low to confirm and to size my position accordingly. But during a cycle low window, I can drop to this 4 hour time chart and I only take the 4 hour signals that happen inside the daily cycle low, right? Uh, and I split my total risk into one third, one third, and one third. And then you I might get into two or three of these 4 hour cycle lows indications before I move on to the actual real daily cycle low trade. So you see here and here, I'll go into this cycle lows, and actually I'm using the wrong example. So you see I'm here. I entered here with 1/3 of my position, and then I entered here as well. And then that would actually give me a slightly better entry point than otherwise. So if the 4 hour low is actually the real low, I'm in early and usually at a better price, and then add when the daily cycle confirms, or I end up with, say, slightly more than than if otherwise, slightly more shares than if I've done otherwise. So best practice is always to confirm the indicator signals with at least one other technical indicator or factor, say the breasted cross, or bounce off the daily average or the trend line breaks, and respect the fact that cycle lows are actually probabilities. They are not guarantees, right? So you should actually use smaller risk on earlier trades or earlier entries into the window. And for long-term yearly cycle low plays, I pair it with macro fundamentals and bigger picture TA. You see a macro fundamentals over here, very useful. You see a very cute Powell's tie is in purple. If you know, you know. That's what Camel always says. And keep brackets. Over time, you'll know which asset the indicator nails most often for yourself, for your style. So to wrap up, for me, the candle indicator has become a go-to tool, not just for finding cycle low turning times, but also for managing my risk and timing entries better. So it usually works across crypto, equities, bonds, commodities. So basically everywhere that cycles exist, they're just hard-coded into the universe. If you are into cycle trading and you want a systematic way to time entries, absolutely worth looking to use it properly. I end my video here and have a great day, guys.